The stock market's slipping a little bit, with today being the biggest down day it's had in over a month, and it's got a lot of people wondering if more downside is coming. And so if you're nervous about protecting your long-term holdings, here's a simple way to hedge yourself without selling any of your current shares. I'm Michael. I'm a pastor who teaches other pastors how to trade stocks and options for extra income. And today I want to show you a very simple hedge that you can put in place when the market feels a little shaky. Here is the index fund for the Nasdaq. So if you have a lot of holdings in tech companies like Nvidia, Apple, Microsoft, those type of companies, this fund is going to be the primary one you're going to want to use for this strategy. The chart that we have above us shows that we are breaking a little bit lower, and we've got this reasonable downside target of that 580 to 590 area. That's right around the upward one standard deviation band of the yearly VWAP for the year of 2025. So if you think we could continue our move down around that level before we find some support, but you don't want to risk losing that much more in the shares and the portfolio that you have, here's what you can do. You can buy a put debit spread to offer yourself some protection. Think of it like insurance. If you buy the 600 put and sell the 590 put, you're creating that spread, and you're using the December monthly expiration, which expires December 19th. Now this spread costs, as of right now, $2.85 or $285 per contract. If the Nasdaq stays above 600, you're going to lose that $285, and that spread is going to expire worthless after December 19th. However, if QQQ falls below 600 and all the way down to 590 or anywhere below 590, this same spread becomes worth $10. Well, you only paid $285 for it. That means your maximum profit is $715. So you're offering yourself a little bit of protection that's going to help offset that downward move from your longer term positions if the market really does continue to pull back. So you don't need it to crash. You just need to move down into that 590s, and you're going to pick up an extra $700 to help offset some of the losses that you're currently encountering from your longer term positions without having to sell them. Now, as a qualifier, this is not a recommendation for you to do this. I'm not advising anyone to take this approach. I'm simply sharing some educational material with you on how you could protect your portfolio if you think further downside is a strong possibility. And a put debit spread is a great way to do that. Follow me for more tips and tricks on how to protect your portfolio, how to grow your income, and how to increase your nest egg so that you can continue focusing on your ministry, not worrying about your finances quite so much.